Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks traded mixed on Tuesday as the blue chip Dow index jumped to continue a rally fueled by optimism that Washington may soon end the record-breaking government shutdown. Tech stocks faltered, however, in a bid to extend their own rally, dragged down largely by Nvidia, CoreWeave, and NBIS. And guys, today's price action was actually sell tech rotating to everything else. You can actually see here, of the mega caps, Apple was up 2%, and that's because they probably have the least extensive AI strategy. You can see Nvidia, which is completely dominated by AI, was the worst performing, down by 2.65%, along here with Oracle. Microsoft was in between. Google and Meta took it on the chin as well, particularly Meta, down 1.26% after the announcement from CoreWeave. They gave CoreWeave another $3 billion commitment. Tesla was down 2.23%, but it was actually green everywhere else. I mean, look at the rest of consumer discretionary. Very green right here. Industrials were green. Real estate, utilities, energy, healthcare. Financials, well, half and half. I mean, mostly green. Some of the big names were kind of flat here today. Hood was down 2.87%, Robinhood. And anything but related to software or AI did take it on the chin. For example, look at utilities. These names right here, CEG and Vistra Energy, they're highly levered to the AI trade. And that is why they were down when utilities were broadly green. You can see that every single sector did gain today, except for two, utilities and tech, the AI trade, right? Gold was kind of flat here today, and the S&P 500 was only up 0.18% because of tech. Tech is such a big weight in this index, it's going to drag it down when tech falls. However, you look under the hood, industrials, consumer discretionary, financials, com services, real estate, materials, staples, energy, healthcare, these were all very, very positive. In some cases, up nearly 2% on the day. Very, very positive stuff here from healthcare. Now, healthcare is bouncing back after yesterday's sell-off. The ACA subsidies still up in the water. Oscar Health, Molina Health, United Health, they all took a bit of a bounce back here today. Energy was up after some news in Russia. We'll talk about it a little bit later on in the video. And staples was up 1.26%. A little bit concerning to actually see some of the more defensive sectors here at the top: healthcare, staples, real estate, right? But broadly green today, especially if you look under the hood. You could see here that it was really a day for value in smalls, mids, large, and everything in between. The value segment really just rallied today, and then it sort of just faded. You can see growth was down, core was sort of in the middle. Mid-cap growth, however, was roughly flat, but again, not a disastrous day. Sure, maybe you could look at like large cap growth and say, hey, we were down 0.53%, but small cap growth only down 0.1%. Nothing crazy. Now, the market momentum, the mixed price market momentum, stemmed off, I think, quite the number of news items as well as economic data. Now, we got the ADP weekly employment change. They provide this weekly now, as well as the monthly figures. That came in at a negative 11.25%. Now, there isn't actually a forecast for this just yet. This is literally the second week that they're doing this ever. So it's probably going to take a while for the market to build out its model as to what to forecast. But, this does show us that the labor market probably is tightening, is still softening, especially in the private sector. We do get a lot of labor market data out at the end of this week. So we'll see where we stand. We also had Fed Bar speak today. Now, on the tariff front, on the trade front, there was quite a bit of news. Number one, we're looking at a potential India and Swiss trade deal nearing with Trump. So that's positive. But the Wall Street Journal also reported that Beijing plans to keep its exports of rare earth minerals out of military hands, even as it speeds up flows to other American buyers. Now, this is not really a big deal because the military can get their hands on it if they want to anyway. And the big reason why we actually saw tech stocks get hit is because SoftBank came out and sold its $5.8 billion stake in Nvidia as it doubles down on OpenAI and other AI bets. We'll see how this plans out. A bit of a rotation from one firm into the other. We do know that OpenAI is going to be getting this money directly as they sell shares to SoftBank. That being said, it does look like OpenAI and the funding round and the AI trade continues. And then I think ultimately why the market, or the broad market ex-tech, really rallied today has to do with the government shutdown, right? Because we're really getting momentum. There's a push to reopen the government. We know that. And it took another step forward as the Senate on Monday evening passed a funding measure advancing to the House for a vote, and the House Republicans coming out and saying this vote could come as early as Wednesday. And I think by Friday, you probably have that back pay in people's bank accounts. etc. That being said, we are seeing movement, and that is really, really good. And then looking at some of the market movers, I only got two for you today, but the first one was CoreWeave. Now guys, the stock was down 14.8%, and another reason why the AI trade faltered today, even though they actually beat their sales targets, 1.4 versus the 1.3 billion analyst expectation, they smashed EPS expectations, negative 22 cents, right, versus the market expectation of negative 51 cents, and the revenue backlog doubled quarter over quarter to 55.6 billion. But I said, unless we actually get a revenue backlog of 60 to 65 billion, the stock's gonna fall also. And there's some delays as it pertains to Core Scientific, but I think this is a buy the dip opportunity because they announced another hyperscaler deal with Meta. OpenAI increased its commitments to 22 billion. Meta increased its commitments to $3 billion. I think this is actually a buy the dip opportunity. I think this is a $200-$300 stock in 18 months from now. Also, another AI data center competitor, Nebius Group, was down about 5%. Very, very volatile. It dropped its earnings, and I think this is probably the best buy right now in the space. Absolutely crazy. Now, it missed on revenue because it literally could not fulfill, it didn't have the supply to fulfill that demand. So revenue is still about 153 million, right? So very small amounts of revenue. However, it was their guidance that was absolutely crazy to see why this number was down, right? Management guided for $7 to $9 billion ARR, which means that currently, right, Nebius stock is trading at 3 times forward ARR. That's like dirt cheap. The average software multiple, right, the average software stock trades at like 10 to 12 times. So this is an absolute steal. Contracted power expected to go up to 2.5 gigawatts. Connected power now at 1 gigawatt. And they're sold out of all of their capacity, right? 19% adjusted EBITDA margin. Look at this growth, absolutely insane. 39% quarter over quarter, and they secured $4.3 billion in funding. They did also announce an ATM offering, an at-the-market offering, so that's probably why the stock is down. A bit of dilution. It was a massive amount of dilution, and you're looking, the company did $153 million or 147, I think, million dollars this quarter. They're looking to what? 30x that next year in ARR? Recurring revenue. I think this is an absolute buy right now. I think you should double down on NBIS. This is absolutely insane. If these numbers come true, the stock's cheap. The stock's super, super cheap. You see, it trades right now at $100. If next year's numbers materialize, it's a $500 stock in the next 12 months. For sure, 100% if we get to those figures. And then for everything we saw today, there was 3,500 advances, 2,500 declines. We saw net inflows in the Nasdaq exchange, outflows in the New York Stock Exchange. The S&P 500 was so-and-so, and market momentum is exactly as it was yesterday. We gained the 5-day, didn't see any tangible improvements here in the 20 or 50-day. However, we've taken the 100-day, and the longer-term averages, the 200-day, continues to remain very, very silent. In other words, we're seeing momentum come back into the market, especially the broad market. You just need some of these medium-term averages to come our way. Once we get those, I think the market probably sees all-time highs sooner rather than later. Guys, looking at the market, the market as a whole, the charts, you can see the S&P 500 up 0.24%, and you can see the S&P 500 for the week up 1.79%. So still a very fantastic week. The Nasdaq 100 down 0.24%, however, still up 1.95% for the week. So for everything we saw today, markets are still looking really, really good on the week. The Russell 2000 gained today, outperforming the Nasdaq 100. Same with the equal weight, mid caps, small caps. Very good day for the broad market, especially the equal weight. Good to see that outperformance happening right there. And guys, these stocks are just off their all-time highs. I mean, look at that. It's like 2 to 3% off their all-time highs, and they just keep seeing strength. They keep seeing buyers coming into the market. Very, very solid stuff here. I like what I'm seeing in the market, and ultimately, this is still an opportunity where you want to buy the dip. And even if we go all the way to 22,000, and I've been saying this for a while, even if we pull back all the way to the 6130 area in the S&P 500, you want to be buyers of dips. We saw international stocks rally except for China. A little bit of trade tension, but India, Middle East, Europe stocks all gained here today. Crypto took it on the chin. Not really liking the price action in crypto. Crypto normally leads equity, so and we see crypto rolling over a little bit here after the massive pump over the weekend. Maybe that's in store for equity, so we do want to remain cautious, but cautiously bullish in this market. Volatility did tick down, yields ticked up, and I think that has to pertain with the government shutdown, the stimmy checks, inflation, some of the ADP data we also got. So we'll see what happens there. But yeah, the 10-year yield getting to that 4.2% mark, not really what you want to see. The dollar took a bit of a turn today, down 99, but I'm still bullish into year end on the dollar. Silver was up 1%, gold was roughly flat. TLTs, treasuries, wow, this is crazy. Look at the 2-year yield, the 2-year treasury and the 10-year yield, right? They gained, but the 20-year treasury actually rallied as well, which means the 20-year treasury yield. Let's actually go ahead and look at the US 30 yield, US 30Y. What happened with the 30-year bond? Today, the 30-year bond was actually up 0.32%. Very interesting to see that price action in TLT there. Very, very weird. But let's actually talk about the S&P 500 really, really quick, guys. You know my thoughts. The weekly chart looks just spectacular. How can you be bearish when you're looking at something like this? And even if we are to pull back all the way to this area right here in the S&P 500, we're still ultimately going to be buyers looking for support and looking to buy the dip on the way up. So this is ultimately where we want to go, buy the dip right there, guys, if we do get there. That being said, you want to remain exposed. We've been exposed to plenty of stocks on this channel right now. And the Nasdaq 100, we still want to be buyers of dips in these. In fact, we want to be buyers of dips in all of these indices, but particularly we want to go where the money's going. And right now the money's going into AI stock. Now, I've been saying this for a while. AI stocks have seen a bit of a pullback. I think it's a great opportunity here. Nebius Group, I think we could probably see a little bit more weakness in this name. I think even to like the $90 area, if we get to this $90 area, it's where we found support right here, right? Or we found resistance right here. If we get to this $90 area, I think this is an absolute buy for a name like this, because I just think based on what they told us, the management team has told us, I think the stock is going significantly higher into the end of 2026 if that's the case. Another name I do like is APLD. Very similar to what Core Scientific does, except that I think a much better run company. I said you want to be buyers here at the $30 area. This is where you want to enter the APLD. So we waited for a pullback to the 30, sell some cash secure puts. I think this is a great place. And then on the energy side, right, I think that's one thing we got from all these, from CoreWeave and NBIS. Energy is still going to be a massive bottleneck. EOSE, I think this is ultimately where we want to look for weakness. Now, 1.38%, right? They did great earnings. I think you want to sell cash secure put at the $15 mark right here, and try and get in around that area. We'll see if we actually get a pullback. It does look a bit frothy. If you go to the daily chart, you see we did get a little bit of weakness, but a massive move up. So we probably, if we can get a pullback, form a higher low, like somewhere around about here, I think the stock probably goes higher to maybe the $25 mark. So we'll see if we get a pullback, but this name is just so much momentum in this name right now. So those are the AI names that I really do like. You know what? I actually don't mind CoreWeave as well. I think the sell-off probably a bit overdone, but I think we probably will see $65 at the moment. I think if you're looking for these AI data center plays, look to Nebius and then look to something like Iris Energy. They're vertically integrated, so they own the land, they own the power, and the hyperscaler comes in, gets them the chip. So I like these vertically integrated names like NBIS, Cypher, SIFX. I really do like these vertically integrated names over something like CoreWeave. That being said, I think CoreWeave will do very, very well. And I do think it's looking like a buying opportunity if it does go a little bit lower. That being said, Zara stocks are having a bit of a pullback. That happens, but onward and upward, I do think we're going to go high to the end of the year. Why? Because hyperscalers are not going to stop spending. We've got another quarter of strong spending, and we've got another year coming of strong spending. Now, looking at some of our higher beta assets, looking at Bitcoin. Now, right now for Bitcoin, you can see pulling back right here, and it's looking like it's putting in another lower high. You don't want to see that, but as long as we can hold this area, this key rectangle area right here, I do think there is still upside for Bitcoin. Ethereum, we're still looking for a pullback somewhere in here to go ahead and add more exposure to Ethereum. But yeah, the price action right here for crypto, you can sort of see we have like a daily downtrend and step down, and we put in like lower highs and now another lower high after bouncing. As long as we can hold these lows, I think that maybe we can probably go higher. But yeah, not constructive price action. You really wanted to see follow through, and we're simply not getting that in the crypto market right now. I think yields are probably going to notch around this area right here. I think what the 10-year yield and the 2-year yield are going to do into December is just this. We're just going to see this, and the market's going to freak out when we get to 4.2%, and the market's going to breathe a sigh of relief when we get to 4%. But I think we're just going to trade sideways in this pattern after we've had a very strong move down throughout the year in 2025. I think the dollar is going to see a little bit of strength. We all know why. Just because it's been massively oversold this year, I think we're going to see 102, 103 DXY sometime in 2026. And then quickly, let's go ahead and look at gold, guys. You know what? We really missed a gold rally on this channel here for gold. Right here we were saying either gold goes up or goes down, but never took a position. It does look like we're sort of finding a bottom right here for gold. So maybe this is time to add to your portfolio if we get back again to this 4,000 area. If we test it, find support, and then continue to move up. I think constructively we want to remain bullish on gold and the debasement trade, and that pertains its way into Bitcoin, Ethereum, etc. Silver as well. Silver looking very, very strong. You can see it looks like it must continue to move higher, and if is the low, I mean, these are probably going to go higher. Gold, silver, and the like. And diving into sentiment, this is the fear and greed index, and yesterday we were in neutral. Today, after some of the price action we saw, we pushed into the fear zone. So there is still that, I guess, uncertainty lingering in the market. You think that after the move of the lows, we'd probably be closer to the greed, but no, we are in fear, and this is probably where you want to start adding into your positions, looking for a Q4 Santa rally, because when we look at November and December returns, right? After we've had a year that's greater than 10% into the end of October. Sure, there's a lot of panic out there, but you shouldn't lose faith, because you could see here that into November, into December, the average return that we can get in these time periods, right, is 4.9%, median 5.2%. If we go 5.2% from where we are, that would put us at about the 7,100 area in the S&P 500. So can we get that? Definitely. Is it probable? Sure. But we do have to pay attention to a lot of things, because there's a lot of moving parts. And I think ultimately what we need to get through November and December is some of the economic data. And we also need to watch valuations, right? Because when we look at the long-term average, now, unlike the CAPE ratio, I do like the US Real Value Index. It's not showing that stocks are super overvalued, but it is showing us that we are still slightly overvalued. I would say somewhere between 5 and 10% overvalued. That being said, when this index gets into that overvalued territory and stays there like it did right here, right? That's when stocks really just continue to move to the upside. As you can see, it's sort of when we actually get into this undervalued territory right here. When we get into this undervalued territory, that's when stocks tend to trade sideways. You can see undervalued right here, stocks trade sideways, right? So actually being overvalued, not actually a bad thing historically speaking. Now, we have to pair that with the macro, and I think something that a lot of people are counting out is the consumer. I mean, when you look at consumer credit creation, it actually is ticking up in the right direction. And I think once we start to see the housing market open up and rate cuts finalized, we should see this move higher. I also think the labor market is improving. I mean, when you look at the ASA index, the American Staffing Association index, which tracks weekly shifts in temporary and contract employment, it just turned positive for the year, as you can see right there. This is a leading indicator for non-farm payroll. So the labor market is recovering and has likely bottomed. It's just not showing in the lagging data yet, but we do get a lot of data, especially with this government open. Now, this is on Thursday, not Wednesday. We get no data tomorrow, but on Thursday, we're getting core inflation, right? We're getting the inflation rate. These are the figures we're looking for. Then we're getting initial jobless claims as well, continuing claims. And then we should also get that NFP data on Friday, all the data we've missed. In terms of data from earnings, now the big names are behind us. The biggest one this week was definitely CoreWeave. Very mixed results there from CoreWeave. I like the results. Didn't like the guide or didn't love the guide. The guide was all right, in my opinion. We'll talk about it a little bit later on in the week on the second channel. Tomorrow, Wednesday, we have Circle. That's probably the biggest, I think, a big parameter for crypto is what Circle's going to do, but we also have Cisco Systems right there, D-Lo and on. And for the rest of the week, we have a couple of other names, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.